What do you expect for the economy, given that the Fed has kind of already given us its view that it's still strong enough and inflation is coming down fast enough that we don't really need any more rate hikes?
Yeah, this plunge that you're seeing in the 10-year is really interesting, because I imagine what Powell would say today if we were doing the press conference now and looking at the drop in bond yields. I wonder if you'd have a very different narrative to the meeting. So look, I agree. There is a very, very strong economy. Given the growth rate that you saw in Q3, Q4 is likely to be a strong quarter. Not 5%, but certainly the 2 to 3% range seems quite likely. But from there on, and assuming there is a big assumption here that the consumer does start to weaken, along with a number of headwinds that have been repeatedly listed, at some point in early next year, we would expect there to be a downturn. Now, recession, not recession, I think these are almost kind of irrelevant almost discussions, because what we're expecting to see is a downturn where maybe you see a couple of quarters of negative growth, but the rise in the unemployment rate that you could see will be nothing like or nothing comparable to previous recessions. So a downturn, but this is certainly not a deep downturn that we're expecting.
Seema, what do you think about the volatility that we've seen in the bond market, and how closely is it tied to, the debt and deficits we've been talking about so much more lately? All of a sudden, it seems like the market cares, kind of. Do we really?
Well, so we do. I think if you're a long-term investor, you have to be looking at a range of issues, and we certainly know that the move in bond yields is not just down to one single factor. It's not just down to rate expectations. It's not just down to the Bank of Japan or issuance. There's a number of different factors which are at play here. And certainly, to Krishna's point, it does make it difficult to see 10 years sustainably lower, or down certainly near the low fours anytime soon. So I do think that we're in a higher range. That volatility does mean that, of course, it's very easy to be swept around by the various moves. I think as an investor, you take a longer term perspective. You look at over the 6 months, 1 year horizon, and what you're likely to say, from my perspective, is you're going to see a bit of a slowdown. So you could see some downward pressure in bond yields, but you're not going to go back down to those 4% levels soon.